Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. We are back with the one and only Mr. Greg Dickerson. How you doing, sir?
Doing great, Michael. Good to see you.
Nice to see you as well. So, uh, I've talked in my videos about what I think 2023 is going to be. I won't lead the witness, but I would love for you to kind of step back, acknowledge that, man, we're in Q4 already. Can you believe it? We're already in Q4. 2023 will be here in a heartbeat. When you look at next year, uh, both for yourself, your businesses, your investments, the people that you're coaching, the people that you're inspiring, what is kind of your words or thoughts on next year, both generally speaking and where might opportunity be prevalent and maybe risk need to be considered?
Yeah. So, I mean, very uncertain times right now, right? There's a lot of risks to the economy, a lot of headwinds out there still, but I'm the eternal optimist. And let's look at it from the lens of the war in Ukraine is resolved. Putin is out. We've got that issue done with. He's off the face of the planet. So we can, resolve that and start moving forward. Then you have the rebuilding of everything. You have storms, you have war, you have all these things that, all the rebuilding that needs to be done, which generates economic activity. The Fed somehow magically lands the plane without blowing it up and crashing and destroying the city it landed in. So we can start to recover, economically from a stable, somewhat risk-on environment again. Whatever broke has broken. The Fed could stop, not necessarily pivot, but stop. So we know the things that are pretty certain in the future. They're not going to get back down to a zero rate environment like we saw before. We may not see interest rates at the levels we saw before anytime soon, if ever again. So from a calculating the risk and understanding opportunity standpoint, you just have to reprice everything you're doing based on those factors and that function. It can still be risk on again. You can still have the Fed stopping, but right now they're signaling that they can't get back to the levels that they were before. We've got, again, on the optimistic side, we've got inflation under control. Inflation comes back down to par. I think par 2023 is probably 3 to 4%. I don't think you're going to see inflation back down to the target of 2 for a while, potentially, because labor is so sticky right now with the labor market, and other things, are sticky out there that aren't going to come down anytime soon. So factoring those things, you just have to adjust the optimism and the levels of your optimism and what can be done. But I think it's going to create some really good opportunities in 2023 as we start to stabilize a little bit if things go well and we can get resolution. The other side of the coin, war escalates in Russia and Ukraine. Putin drops a tactical nuke. The world responds. That escalates quickly, but also will again eliminate and evaporate Putin probably from the face of the earth when that happens. So that could bring resolution. The Fed breaks something, economy starts to tank, collapse. They have to pivot, drives inflation back up again, which does more damage than anything else. So that's going to create risk off and very defensive positions going into the future. No matter what you're doing, you have to be cognizant, because if inflation continues to spike and we get up to 10%, 11%, it's out of control because of the other damage that's been done. Then you've got a real problem, because consumers are now way pulling back. Now you're in a deep recession, and then potentially the labor market starts to correct itself, and then you go through a longer cycle where now you're looking at 2, 3, 4, 5 years of a recovery cycle versus maybe we're out of it in a year. So those are the kind of the two sides of the coin right now, until a couple of these things, the war in Russia, Ukraine, and the situation that we're in with inflation and the Fed breaking things. Those are your two biggest caveats out there. And then there's whatever we don't know that's going around, contagion around the world in the global macroeconomic environment we're in, with oil, with the bond markets, with the dollar, putting pressure on everybody around the world. So there's a lot of things to think about. I'd like to take the optimistic side and say, hey, maybe we get some of these things resolved and we can start rebuilding in 2023. But I think that might be a little too optimistic.
Yeah. One of the things that, again, I've always studied is the consumer. And I think the Chinese consumer actually can help educate, folks that don't look at the consumer very much. So if you go back on my channel over a year ago, we talked about Evergrande. We talked about Starbucks missing an earnings call. We talked about Nike product ships. All these things are from quarters ago. Now we're hearing, consumers not paying mortgages. We're hearing this, all of these things. And, China could certainly have negative GDP. China could head into their version of a Great Depression. And it's all because of the consumer. If we lose the consumer, black swan event, unemployment goes to 10, inflation goes to 12. I mean, the war escalates. I mean, if we lose the US consumer and all they do is retrench, pull back, if they pull back in mass, like is going on in China right now, it could be very, very painful next year. Is that fair?
Yeah, I mean, we're a consumption-based economy. So yeah, I mean, it's all based on consumer spending, and it is, declining. We've got some information coming out this week that's going to kind of give us an idea of what the consumer is doing and where they stand. But, people are already pulling back. We're getting ready for the holidays. The pandemic, cushion that everybody had with savings and building credit and things like that, they're starting to dig into and unwind, because inflation is still a problem out there big time, and it's putting pressure on people, reducing their disposable income, and especially when they have to start thinking about Halloween, Thanksgiving, Christmas, where they're spending more anyways, and coming off the summer travel season where everybody thought, everything will be fine by the end of the year, and it's not.
Yeah, it's going to be very interesting. Again, I've studied the consumer, and again, they do move in mass. The consumer is clearly showing stress. To your point, August of 21, we had record savings account balances of $2.1 billion, I believe. Might have been trillion. Anyways, we spent 660 billion of that. So it's already down roughly 30%. People are using it, right? Inflation is real, and inflation hurts, it hurts everyone, but it is a regressive tax, which means it hurts the poor the most, middle class next, and the rich barely feel it, but it is there. So yeah, the consumers, we've got to watch. And, negative wealth effect is real, right? We have the stock market that broke the June bottoms, although I think it's up today. Is it a bear market bounce? Who knows? But it's, we've really got to watch the psychology of the consumer as we go into 2023. And as I sit here, 2023 is the most uncertain year of my adult life. There are so many extreme, right? War resolves itself. War escalates. Inflation comes down. Inflation goes up. I mean, it's just so confusing when I look at 2023.
Yeah, and the markets are not the economy. The markets they're in a bear market, and they're extremely volatile, and they are subject to headline risk and headline news. And right now, what the markets are thinking about is the Fed meeting, and are they going to pivot, and all that kind of stuff. So, markets can be up and down 2 or 3% in any given day in this environment right now. And if you go back and study the bear markets of 2008, 2001, you'll see big, bounces as the market kind of slowly works its way down. And we still have trillions of dollars that has to be removed from the market that was artificially placed there. And we may be at a point in time where the central bank and central banks around the world really can't do anything to prop the economy up. Now, that's very different than what the Bank of England did, to support, bonds over there in the pension funds. That's very different than full-on QE, reversal, pivot, and all that. We may be in a situation where the Fed and the central banks can't pivot. They can't do QE again. They can't bring interest rates back down again, but they can stabilize certain sectors in certain areas and sprinkle a few things in there. But that is not a pivot, and that is not QE.
Yeah. 2023 is going to be a very interesting year. We're all going to go through it. Again, do your work. I do lean optimistic as well. And again, as Greg has reminded us time and time again, good times never last, bad times never last. So this will end, and the people that come out of it stronger will be the ones that took risk-adjusted returns and made some moves. So, Greg, where can people find you?
Yeah, gregdickerson.com.
Awesome. Thanks, buddy.